You are listening to the Creative Talks podcast, presented by the Architectural Authority magazine.
The biggest problem that the Florida Department of Revenue has regarding sales tax is not really the reporting side. It's really collecting and not paying. You know, there's where the huge fines come in. There's where there's the misdemeanors, there's felonies, there's even jail. And I show you, and I was explaining to you because you're taking money that is not yours and you're not repaying. It's like you're stealing something. So
and you said that happens even in $5,000,
even in $300. So having errors on collecting or not, not collecting it the right way, or putting it in one another. Those things, when you have a good tax accountant, they can go for you, and they can fight for that and make sure that you have the proof that that was a design and I was really not reselling it. Biggest issue of having someone represent you and not winning is you collected and you took it.
This episode is sponsored by the Stones & More Group, your go-to destination for premium surfaces and a leading wholesale distributor with over 2 decades providing top-quality porcelain, ceramic, slabs, mosaics, panels, and building materials, crafted to transform any space. To learn more, visit our website at mosaics.com and explore our full range of premium products.
Welcome back to a new episode of Creative Talks. Today, we're bringing you a special edition recorded live from Anima Domus, a premier destination for contemporary furniture. We're tackling a topic that's essential for every interior designer, taxes and resale. Because, let's be honest, understanding the financial side of our business is just as important as the creative side. From collecting resale certificates to navigating tax regulations and staying compliant, managing finances can feel overwhelming. That's why we're bringing you an expert to answer your most pressing questions and clear up confusion. I'm thrilled to be joined by Ana Maria Focil, our expert today, who will be guiding us through the ins and outs of tax responsibilities for interior designers. This will be an open, informative Q&A session where we dive into real questions that designers like you are asking. So let's get started and enter the world of taxes for interior designers one question at a time. I'm going to start and break the ice. Okay. This week I had a situation where the slabs that we selected with our clients were too small to fabricate our island. So I had to quickly go and research for a jumbo size slab. My clients are out of town and I call them from the store. Look, I found the perfect match, blah, blah, blah. There's only 4 slabs left. We have to pay. And they asked me, can you pay and I reimburse you? And I said, yes. I always say yes. So I paid. And then I said, okay, I'm going to ask this to Ana. How should I bill that? Because I'm not reselling. I'm just doing like an expense report. How should that invoice go?
Well, thank you for inviting me. So there's not going to be a right or wrong answer to all these questions, just because situations vary, and we might want to go, the right way and not do what we're not supposed to do. But sometimes we're in positions where we have to make a decision. Mm-hmm. So in that case, you should have said, "I'm going to pay the tax, not pay with your resale tax, because you won't be reselling it."
Okay, I did that.
So
good. I paid a
lot
full
of people,
amount
they just don't know what to do. And in that position, they use the resale tax, they buy it. And then what am I supposed to do? Because, I'm not going to resell it.
But even though I'm going to be billing for materials and it's not going to show a tax, the justification will be because I paid the taxes already.
Right. That is correct. So I think the easiest way to see it is that you have to think that the sales tax has to be paid just one time. So who's going to be the end user? Who's going to be the last consumer? So when you put into that perspective, when you're thinking, okay, am I supposed to be paying resale tax and this person is going to be paying resale tax again? Then, this shouldn't be happening. So in that case where you're going to resell it, you say, okay, I'm going to use my resale tax because I'm going to resell it, collect the sales tax and then pay it. I'm not going to pay sales tax now and then collect sales tax and repay it. So just try to put yourself in a position where think, okay, am I the last person to use it or am I the last person to collect it? So I'm the one that's going to be remitting the taxes to the state so that we don't pay it twice. And at the same time, we don't avoid it.
Mhm. There's a lot of the designers here that do procurement. I will invite you to bring in some questions. I'm looking at you, Mayra. The other day we had a conversation, and one of the things that arise was when you bill for, let's say we buy this sofa at Anima Domus, and we bill it to our clients. In that same invoice, we are supposed to bill for the service part as well with taxes.
That is
Can
correct.
you explain us that?
So if you do just a consultation, then there's no tax involved. We're talking about sales tax because that's another thing. People confuse saying, okay, I'm not paying any tax on it. Yes, you're not paying any sales tax on it. Doesn't mean that you're not going to pay federal taxes at the end of the year. So it's a different type of tax. Now, when we're talking about sales tax, then sales tax is, if it's just for a service, then you don't have to collect sales tax. But when you're putting the service plus furniture or any accessories or even the installation, everything else has to be collected. The whole invoice has to be collected first.
What happens if we split the charges?
So that's the most common thing. That's what most of the people do. They do one invoice for one thing for the consultation and another invoice for the furniture. If they audit you and if they find out that it's the same client at the same time and it's the same type of service, they'll require you to pay for it. Now, chances are slim. What you can always argue and say that it was just going to be a consultation. You were not going to provide any furniture. And at the end, it was, a different service. So it was a different service at a different time. It just happened to be, close in time into the same person.
Okay.
We have a microphone.
Oh.
So
Right.
When we bill them for the design, concept, and development, which is a service,
Right.
we are not supposed to collect taxes.
Right.
If we have separate invoices for the purchase of furniture, in my case, I know I apply the discount from the vendor, then add the markup, and collect sales tax for the full amount, the cost of the item and my markup. That's what I was told I needed to do.
Right.
Now, when you say if we get audited, even if it's being billed separately, we're not commingling in the same invoice services with the purchase resale of furniture, are we supposed to collect tax for the whole transactions? For both?
Well, it has to be on the same project and on the same client and for the same thing. So let's say you go in and do a consultation for, I don't know, remodeling a kitchen, let's say. And then at the beginning, it's just the design and you don't collect any sales tax. It's just a service. It's just a design. Then later you're going to build for, the kitchen itself, the installation and the cabinets and everything else. Then that was supposed to be collected. It was supposed to be a whole project. It was supposed to be collected at, one point, just one invoice. Now, you can always argue and say that, we're just going to design it. And then, later on they decided to do it and it was just a separate transaction. But at the end of the day, when we're talking one client is one project. So if that project includes design and furniture, you should build the whole thing with sales tax, even the installation.
we were also advised to put our procurement services out of the design
on a separate contract.
Design contract.
Yeah.
And maybe that helps if there is an audit. Yeah, we have this for procurement and this contract for services.
So the law, if you check online, it changed in 2022. Like that's the most recent one, so it's been years on it. Unfortunately, here in Florida, Department of Revenue, the people that work there, they don't have the best advice. So you can call today and they can tell you, bill it separately. There's not an issue. Then later on, 3 years from now, they come and audit you. And the person that comes in tells you, no, you should have been, putting it all together because it's the same client. So it is very subjective. All the law says, and I have it here written, if you want to see it later on, we can just go over it, is that if the project is the same for the same person and you're building a service with furniture or accessories, or you are supposed to collect sales tax on the whole amount. Now, there's legalities that you do. You can do contracts doing separated things so that you protect yourself. That doesn't mean that when an audit comes, you're going to be 100% protected. So I have clients that are interior designs. I have ones that collect on everything, because at the end of the day,
And
you're not the one.
everything, even service, just service?
Like, no, I'm saying, like, if they have a service and then later on they just don't split it,
together.
all together. No, if it's just a service, it's just a service. That, like me, I'm a service person, so I don't have to collect any sales tax for what I do. And they just rather.
Usually when we sign, in my case, when I sign, it's clearly detailed, like the phases, and the phases, the initial phases, design, concept, and development. Then you go into procurement, then coordination for the project. It all depends, but it's all laid out on the initial contract.
Right.
If we remove the procurement from that initial contract and we sign at the same time a separate contract, will that work? Or the FDR will see at it like, okay, you're splitting it, but it's the same contract. It's happening at the same time. It's the same client.
I mean, I have seen it both ways. So I have seen clients that are audited and have to pay. And I have seen clients that have charged for it and have money back. They have a refund for overcharging.
After an audit?
After an audit. So I just got one last year where it's a construction company, and he has a lot of issues, with one and another, and he's been audited many times. So on his safe side, he said, anything, we just bill and collect sales tax, and, that's the way it's going to work. And he got back $14,000. So it does happen because the auditor came and said, no, this is a separate contract. You shouldn't be collecting on this. You should have just been collected on that. But I've seen on the other side that they say that, it's the same person almost at the same time. You're splitting it because you want to split it and not charge it. And, so it goes both ways. The way I see it is, unfortunately, a lot of clients don't want to pay for it. Fortunately for you, you're not the one paying for it. You're the one collecting it. So, it's a matter of thinking, if that happens, will you be able to pay for that you didn't collect? Because reality is that if an auditor comes in 3 years from now and you get audited and you have to pay that money back, you're not going to call your client and say, oh, you know what? For a project that I did 3 years ago, here is the 7% that you have to pay me.
Yeah, not even 6 months ago, they won't pay it.
Exactly. So that already, audits usually they're not closed. Like it's not going to happen for last year. Usually it takes 2-3 years. It is random.
I was going to ask you, what calls for an audit? Why are,
I think it's a lottery.
Happen?
But it also has to do with who gets audited. So let's say here they got audited. You can get chosen from the people, because you were a customer from here. So it's going to depend on a lot of that too. Like when they audit, the other side, when you have a project, they might audit you just to make sure that you had all the resale tax. Let's say here, they make sure that you have the resale tax before selling it to you, and not making sure that since you had one 3 years ago, that's going to be valid. So they make sure that, and then if they find something, what if they don't have it in your file, they might go, after you. I haven't seen that many audits in sales tax for this type of sales tax in the 20 years.
What happens if we do have a resale certificate, but we're not declaring anything every 3 months like it's supposed to, but it's because we're not reselling? Will that call their attention to audit or not?
Well, you are required. You are required to file every 3 months.
Even if it's a
zero. Now, you can ask for an annual filing, and they can approve it. So you can just do it once a year, because you tell them that you're not going to collect any taxes. Now, if you collect taxes and it's over $1,000, then they're going to make you do it every month.
Okay. Any more questions? We have a question back there.
What happens if you do not have your resale down?
What happens if you do not have a resale certificate and you're assuming the tax of the goods you're buying for your client?
That's fine. You don't need a resale certificate. Okay. So you just need a resale certificate if you don't want to pay taxes when you buy something.
If I am paying the taxes for my client and my client after pays me the refund of whatever I paid before, I do not have to file taxes.
Well, if you don't have a markup, yes, you don't. Okay. But if you have a markup, yes, because at the end of the day, when you resell it, all the reasoning behind is that, you're not paying taxes to when you're buying it, but when you're reselling it, you're actually reselling it for more. So the taxes are going to be even higher. So that's why they give you this opportunity that you don't pay taxes when you buy, but when you sell. Now, if you buy it, you pay taxes, and then you sell it,
You're
at
just
a higher
paying double.
price,
You're
and
just
then you're
losing
not
money.
collecting. You're supposed to be collecting on that difference.
No, because I normally what I do, I just tell them instead
Pass
of
it.
giving you the discount, that's the markup that I'm keeping.
That is
so I'm
that's
just
fine.
paying the full
As
amount.
long as you don't charge them more,
Yeah.
it's okay.
Okay.
So the trade discount works as a markup that we don't have to
So the resale
disclose.
tax, yeah. So the resale tax is it's something that benefits you usually. It's more than, it's not really that it's required. It is required if you don't want to pay taxes for that, but it's not required for you to buy and and give it to your client. You can, if she buys it for the same price and just tells the client, this is the amount I paid, and she already paid the taxes for it, and there's no markup on it, that's fine.
So basically, I have a question. So basically, that what she's telling and what Cindy did with her client when she was buying the slab, she paid the full invoice with the tax included, right? But upon that, she charged a procurement fee.
I didn't.
Oh,
It was a reimbursement.
okay.
Yeah.
So, in that case, I would charge a procurement fee. On that procurement fee, which is a service, do I need? I do pay taxes, of course, at the end of the year,
Right.
federal taxes, but
So-
there's no any other tax that I should add to that.
Well, it's gonna depend on how you see it. So, because one thing is reselling something, and another thing is charging for a service to go and buy something. So, if you can prove them that it's just a way, that's a fee that you charge them for going to a place and buy it, it's a service. Now, if you're reselling it because you have a markup on everything that you buy, you charge them, I don't know, an extra 20%, then you are reselling it. So, it will be a matter of proving that it was not resale, that all you're charging is a service for, and then they pay their fee.
Should
Now,
we make notes in our billing? Because in 3 years, we're going to
in
forget.
reality, you should have not paid for. The better way to do it is not pay for it. For them to pay it. Because at the moment you are paying as a designer, it comes to the mind that the person that is auditing you, that you're going to resell it. Because why will you pay for something if you're not going to get anything out of it? So the best thing to do is that they pay for it when taxes are involved.
When
and
there's
you pay
no
for it.
procurement fee or there's no markup.
Right.
It's the best thing to do.
In your case, it would have been better that instead of her reimbursing you for the amount, it's easier to say that.
And we lose the slabs in a week.
That she can pay. I know. So that's what I'm saying. Like, it's easy to say all the laws and what you're supposed to do, but reality is completely different.
Right.
So you're putting to points where you say that, what do I do? I have to do it right now. So what is the best scenario for me?
You've had this experience before, but for example, we have an account, we hold accounts at Crate and Barrel. When I started, my super dear client knew that I had discounts everywhere. So she asked me for those numbers, and I again said yes. And they went and bought. We don't pay taxes at Crate and Barrel, for example. And who is going to report that? No one. No one paid for that. Will they audit me for that one purchase at one
They'll
point?
have to audit Crate and Barrel, and you'll have to be chosen.
Yeah, but I think that model, it's less convenient for us when there is an automatic no tax payment on purchases, because ultimately we decide, yeah, you can use my discount, but you have to pay your taxes because you're going to stay with the item.
Right, that's correct. So that is the model, that the way it works. And I wanted to add something on her resale tax too. The resale tax automatically renews. So it's not that you have to go and renew it unless you're not doing your filings. So in her case, that she was having all these penalties, maybe hers didn't get renewed because she had all these, many filings that she didn't do. And now she has all that money there that she owes them. That can come 7 years from now, 8 years from now, with lots of penalty of all those $25 filings that you didn't do. Now your resale tax automatically renews. So if you don't want it, you have to cancel it.
That's what I did. I called because I got the first 3 months and I got my first fine or whatever it's called. And I called and said, look, I'm not using it. Can we put a hold on it? She said, yes, you can put a hold up to for 1 year. If you don't call to activate it, we're just going to cancel it. And I said, great.
Maria, but you saved me at that time like $2,000 of penalties, because you told me you can tell them that you did it late and they will just reduce it. And I ended up paying $50. So I'm sharing this because it might happen to somebody else that you receive a penalty. And if you do it late, you still get waived for the penalty.
Took away all my penalties when
Yeah.
I called and explained the lady what was going on, and she was super kind, super nice, and then that's it. And I decided until I don't open a store or something else, I'm not gonna do resale certificate anymore.
But you do procurement for your
I
clients?
do, but then I tell them to buy it directly, and I just charge a procurement fee for my services, and that's it.
You can also request that they do an annual filing.
I didn't know that, so
So you
I
can
might
do
go
once,
that
you
way.
just make sure that by January 18th, you file it once a year, and they can approve it as long as you don't collect any taxes. So, but if you are using it for resale, then you might be collecting it. So once you do one that you pay, then they're not going to give you for a year. But that's another option. Now, sometimes when you call, it's very easy. Sometimes not. If you go to the one in Doral, it's very easy to talk to them. They're more helpful if you go there and explain them the situation. Biggest issue with the Department of Revenue is ignoring them. It's worse than the IRS.
Well,
They put a lien like that, and once you have all those penalties, and sometimes it's easy to get them out, sometimes not. It depends on who they are, and also they assess the tax the way they want it. So let's say you buy furniture for $1,000, and if you don't report anything on that sale, on that, they can come and say, oh no, that $1,000 was really worth $100,000, and they assess a tax over $100,000 until you prove them how much that was sold for. So it's better to respond, and doing it online is very easy. I teach that a lot too. I do that service, in my office, we do sales tax services, but I also teach my customers and my clients how to do it, because it's very easy to go online. It's 5 minutes, especially if you have nothing. If you have to report sales tax and pay, then it comes a little bit more complicated, because you have sales tax and surtax, and depending on where you sold it and what's taxable and what's not. But if you really don't use it and you just go online for, zero tax, it's a very easy form.
Joa, you had a question.
So my question is, for example, how I do my job, how I charge my services is a percentage of the total amount of everything that I'm managing. Okay, but this the description in the contract is like that. How I really do the procurement is my clients pay directly with the trade discount that I want to give to them,
That you pass on.
and they pay directly the invoice. And the furniture company, give me back in a check the part that correspond to me because my trade discount. So in that case, I'm doing well, because actually I'm doing that way to avoid the sale tax, because I have too many things to do and I don't have time to do that.
Do they pay tax when they go to the furniture store?
Yes. And sometimes they pay themselves. Other times they send me the money and I pay. So it can be the two options.
So when they pay, it's the easiest way,
Okay.
because they're already paying and they're responsible for it. Anything else that you mark up after, it's a service, because really you're really not reselling it, because they're the ones paying for it.
Exactly.
Now it's different when you pay for it, because you will have to prove that you didn't resell it. Now, whatever the money that comes from the furniture company.
But one question. Sorry that I interrupt you, but it's regarding just this part. So I have the invoice. So they are sending to me exactly the same amount of money of them. So I'm requesting same amount of money.
Are you paying with tax?
Yes.
Yeah.
Yes.
Then
It's like
that's
an
fine.
invoice. I come here, I say, okay, I have 20%, give 10% for my clients, 10% for me.
Just
So
don't
after
include
they
that
give me
procurement
back-
fee there. Just don't include the procurement fee in that invoice.
Never.
No, but I don't understand that part. O sea, I come here, this table costs $2,000. I have 20% discount. So they bill for me with a 10% discount that is applied to my client. So they're gonna pay with taxes, with delivery, $1,900. And they give me back in a check completely separately, or they wire me $100 because it's the money that belong to me.
Yeah, but that has nothing to do with sales tax,
This
because
is okay.
any money that comes from the furniture store comes in a 1099.
Okay,
And that comes as regular income for federal taxes. Has nothing
Okay.
to do with sales tax.
Even if how I charge to them is a percentage of the total amount, including the furniture that they spend.
Or you're not supposed to be charging on the furniture. I understand what you're saying, because it comes in a one invoice and includes everything else, and the furniture is paid on one side, but
So
you're
let's
charging
say
that service in your
total
invoice.
project was 300,000, but it includes all the furniture, finishes, everything?
So my fee is 20% on top of that, of the total amount, everything
Is
that
that
I
a
do,
legal
construction.
way to do it for the IRS?
I think I'm not getting it right. So you have a contract with all your fees, including the purchasing.
It's only one
of-
fee.
My
The-
fee, I do very simple. My fee
20%
is
of the
20%
cost.
of everything that I manage in my contract. Doesn't matter if it's kitchen, construction, architectural drawings, furniture, absolutely everything, art, everything.
And then you
that I
charge
want-
sales tax on that.
No, she doesn't.
No, this is my fee as a design and management about the project. This is my contract. Instead to have a flat fee, I have a percentage fee about everything that they manage.
But we have to see why you're managing to see if those things are taxable or not.
I'm explaining to you. It's construction, it's art, it's furniture, it's
Art, it is
kitchen.
art. Art is construction too. So you are supposed to be charging sales tax on that too, because you're reselling the art.
No, I'm not reselling.
But she's
the
not
art.
reselling.
No.
They're
I'm
all
not
buying
reselling.
it. They're all buying it direct. But at the end of the project, she spent $500,000 in this project, and she gets 20%.
Right, but you're getting 20% of that thing that was bought on another thing that was taxable, but you're not paying taxes on that.
But
Right.
I'm not reselling it. This is just my fee as
I
a
understand, but the
designer.
law says that if you have a service attached to furniture or accessories or art or anything, sales tax has to be paid on everything, even the design fee.
So one good practice for Jova to implement would be to bill separately what she charges on behalf of furniture and purchases, and another
Right.
one on the project.
design.
How would you
Yeah, but
split it?
it's the same like you are. It's same that you are saying that at the end, then we have, because it's same client, same
correct.
project.
Right.
So
Right, but
So
the way
they-
you're doing it right now is more risky though, because you are putting everything, even
One-
you're charging on that contract 20% of the furniture or 20% of the art, even though that was paid in a different invoice, that's still attached to that service.
See, but then I give a lot of the discounts to my clients, so it's not really. I really don't understand, because this is. So usually designers charge in two different ways, or a flat fee or a percentage. All of them, or both, even both. So I really, Claro, in my perspective view, is I was doing that way mainly for that reason.
Right.
Okay, you pay
To
directly
simplify it,
to
to
simplify it
simplify.
and don't have to do resale tax, because I never charge more to my clients for the product that I'm selling to. That I'm procuring from them.
Right, but it's the sales tax is not, you're not paying sales tax because you're reselling it. One thing is furniture, the way it works, with the resale certificate. And another thing is that the law says that when you have something attached to a service, the service is also sales tax. You also have to charge sales tax for the service. So in this case, by separating it and then at the same time, charging that 20% markup from something that you sold in a different thing, that different thing was an accessory. That different thing was a furniture.
An item, a good.
So it was a good. So you were supposed to be selling it. You were supposed to be charging the sales tax on all of it. And really, discounts doesn't really matter, because you're not going to be paying. They're not going to be paying sales tax on. They're going to take the discount and then going to be paying the sales tax. It's going to be after the discount.
Exactly.
Right.
Exactly.
So that doesn't matter. That doesn't have nothing to do with the sales tax. That
So-
has more to do with the federal tax.
So a good advice in this case would be for her to add a 7% to her invoice.
Yeah.
That would be your solution.
So she will be charging her client 27%. 20% if you do a 20% markup
And 7% tax.
as her revenue, and then 7%
Tax, because her
Tax.
revenue is based on goods as well.
7% tax on the revenue that she's making on the 20%.
Yeah, but
It
okay.
doesn't
So
make sense. If I understand correctly, it doesn't make.
yeah,
I mean, she would be protected, but it doesn't make sense to overcharge the client for them to
Twice.
pay that the 7% for her
Twice.
service.
well, that's the law.
Well, it's like if you charge me for a consultation $1,000, then you would add for that service a 7%.
Right.
It's different.
That's how it works usually.
It's different because in this one there are goods involved. If it was only service,
You wouldn't charge it. So you have to think about sales tax is completely different from federal tax. So sales tax is a tax that you're collecting, but it's not yours. You're collecting it from the clients and you're paying, something else. Now, the markup that she's getting, it's a revenue for her. So she's not really getting the 7%. She's getting the 7% and paying it back. Now she's getting the 20%. That's for her. She's going to be paying taxes on that 20%, not on the 7%. Now, if you go and do this interior design for, let's say you charge $10,000 as the design fee, and then you sold something for, I don't know, $4,000 on furniture. The law says that you have to charge sales tax for $14,000, not just for $4,000, because the design is attached to the furniture. The design is attached to the accessory. And it was changed that in 2018. And the same goes for construction too.
Okay, one of the problems that I'm having with my clients is that if we are paying, sorry that I'm sick, we are paying the full amount of the taxes when we purchase, and then if I do that, because I transfer that cost to my client, they will be paying twice.
So not if you don't include it in that invoice, because what she was explaining to me that she has an invoice separate.
Most of our clients are people that they want you to take care of everything. They will give you the money and then you will do everything. So how we can create our invoices that protect us from double charging our clients from taxes, because we don't want to pay. We are not paying it because when you purchase, you pay it. It's not. We are not doing anything illegal, right? But from the percentage of money that we are using as a profit, which is a separate line item in every invoice, how that should be shown in our invoicing, so we are protecting our clients and our company.
I think it should be taxable.
So okay, so let's do a scenario. So you go to the furniture store and they buy $10,000 worth of furniture, right? They pay the sales tax there, right? But they already paid the furniture company, or they pay you. Who will get that money? So
when we work in a full service company, we procure. We procure. So we have.
So you're the one paying it.
Exactly. Us as a company, because we are the ones that are getting the fee. We are the ones that are managing the transportation, delivery, shipping. So the client provides the money to the company that is doing all of this, and that's why we are here, because we buy to Anima Domus.
Right, but in your invoice, you won't be including the $10,000 furniture because you already paid for it.
No. In my case, my company, I do procure. Like the client pays me, and I pay whoever I'm doing business with.
If the client pays you, you wouldn't be paying taxes when you buy it to the furniture company because you already collected and you have to pay it
correctly.
You have to use your resale.
I buy it directly because I pay taxes as a purchasing.
Correct. So you wouldn't be paying twice of the sales tax because you wouldn't be paying the sales tax to the furniture.
I'm not concerned about that. I'm concerned about the fee that it's added to because
the fee. What we learned today is that, and in the last couple of meetings with the attorney, is that we have to collect taxes on the fee when it's attached to furniture.
But what about this double taxation for the client?
Exactly, because when
we are paying, when we are buying.
But you're not supposed to pay when you're buying. That's why you use the resale tax certificate and you collect only once at the end.
In her case,
then how do you get your 20% if you're not adding? When do you get that 20% that is a markup or managed?
At the end?
In the invoice is just reflected the 10%, and Anima Domus gave to me in a wire transfer the 10% back.
So on that 10% that you bill the client, you should collect sales tax, right?
That is correct.
On that 10%.
You're not double charging because if you...
because he's paying already. Or it doesn't matter, but he's paying that.
It does matter because it's not the same if they pay it or if you pay it. So it's separate.
Let's say that he is paying, okay? He's paying, and he's paying the 7% of the
right
discount.
Here. He comes here and buys the furniture, he pays for it.
The discount that I want to give to them, 3, 5, 10, or everything, doesn't matter. The point that after, if he pays, he already paid the percentage that correspond to the amount that I want to, with the discount that I want to give to them, okay? But after, as my design consultant and procurement and all my service, that is design and management, the entire project, I'm charging 20%. So there, if you are telling me that I have to attach again all the furniture that it was $300,000.
No, not all the furniture. They will just be paying the 7% on the markup that you're charging.
That is all the furniture.
Yeah, but it's on the markup side, not on the cost of the furniture. He paid on the cost. Now they're paying on the markup.
Okay. Understood.
When you say that we should collect tax on installations, or for what I understood, when you do material and installation combined, and it's an improvement to the property, it's a fixture. We shouldn't collect tax,
Right.
So
I
how do
actually
we
bought
work
it-
around all that?
So I actually bought it because I was when I do it, I know shipping is not like when you do shipping and you charge shipping, you usually don't put sales tax on the shipping side, right? So one of the things that I went online today and actually, going over is the installation part, because there's a huge debate on the installation. And it does says like installation charges that are part of a sale of a tangible personal property are taxed as part of it. So it is taxed.
But if they become part of the real property, there should be tax exempt.
That is correct. So if it's something that is going to stay as an improvement of the property.
If it's fixture, exactly,
It is correct.
cabinetry, and
We
all
have
that,
a question in the back. If we
everything
can-
that becomes
Right, not art or
They have a mic. They have
Right.
a mic. Yeah.
So it's better just to open a different company just for
We
procurement.
were suggested on that. We were suggested recently to do that, but you imagine the hassle of having two companies now.
But I don't think it's that, and I think it's better and maybe safer for us and for the client that we have. I do have a separate bank account for procurement, and I have one separate bank account under the same company, which I'm gonna change now, thanks to Ana, for design fees, because things could happen. I spend the money from the procurement because I didn't realize my accounting or whatever. So I have separate design fees in one account, separate procurement fees in one account. If I don't want to charge taxes to the client, 7% taxes on the client on my services because they might complain about it, then the easiest thing is to have procurement in a separate business. That is my business anyways.
There's
Can
people
we
that
do
does it.
or not?
Yeah. So I had a client that we have that problem, and we actually went to the Department of Revenue. We talked and we said, she's also an interior design. So we were saying that, and their position is you're not paying for it. The client's paying for it. And I was telling, yes, we understand, but we can lose a client. There's clients that say, but you charge me, you don't. I go to her because she doesn't charge me, and 7% on a huge amount. It is a lot of money. So reality is that we have to try to look for ways to, resolve it. And maybe that's the best way, to have people do DBAs, like doing business as, and then open a bank account as a doing business as. But at the end of the day, it's the same business.
Right.
It gets reported on the federal tax. So you might get an auditor from them saying that, it is okay because that's a service. It's completely separate. Invoices are not the same. You have a separate invoice and that works fine. And you might have one that is very hard. And I say, no, you know what? It's, on the same period of time. It looks like it was the same property. You were doing design. You just, split it because you didn't want to spend it. So,
Is it a good thing to do to have two separate accounts, one for purchasing and one for
I think
services?
it is good. And the same thing goes for invoicing, and in your case that you have a lot of that, splitting might be your best option because that's going to be your best defense if something like that happens. These audits don't happen often. Most of the times that I've seen sales tax audit has to do more with products, with people that, e-commerce or people that buy products and resell it, or that buy products here and resell it in other countries. And then they're stopped by customs. And then when they're stopped by customs here is when usually triggers, the Department of Revenue, and that person or that company gets investigated. These things happens too. Another thing that is try to be consistent. Like if you never sell, if you always collect, don't stop collecting. Like, all of a sudden, don't have those huge sales with everything non-taxable. So try to be consistent and try to have, if you have to split the invoices, split them and make sure you have all the documentation. Like this is all design, this is all the backup. Most of the times they're willing to work with you and they'll understand it. It's an industry that changes a lot too. And it's not just interior design.
If an auditor comes and we win the lottery and we're audited, what do? We go to the Department of Revenue,
the biggest-
nearest.
Well, you should look depending on how much, why they're suing, why they're auditing you, if you have the proof or not. Usually your CPA should be the one preparing all the documentation to talk to them because you don't know
Right.
the wording, you don't know exactly what
Yeah.
you need to provide. So if you go to a tax accountant, now if it's something small, you can just go in and explain it to them and try to solve it.
They'll waive it probably.
They'll probably waive it. Just don't ignore it. That's why a lot of people just keep saying, "Oh no, it's $25. Oh no, it's $75. Oh no, it's $50. I'll take it, later on," and those later on can become a lien.
Is there a portal where we can see if we owe anything?
No. There is a website. The IRS is getting a lot better. So there is a portal that you can go in to check if you have done your reports, and you can check their confirmation numbers. You can check where's your resale tax if you're missing something. Now, if you owe something, no, that will come to you, to your property or to wherever you have your.
Yep.
I didn't just have to standardize this. So it will have to be an account because usually when I ask my clients, please send me 2 or 3 different transfers, and I told them always, please, I request one for my fee, one for procurement. Please send me different transfer.
Yeah, I know.
They don't
Send
do it.
the same transfer, everything together. So I always said, I have the invoices, I have something, so everything, all the information, so the accountant is going to be able to determine everything, no? So in that case, what we should do, send directly the money that we receive, just in the case, because this is going to happen, our clients, once we take care about everything, so we place that amount of money in the procurement account?
Yes. So it's both ways will work for them to audit. You can explain them what happened and they'll understand. The problem is that usually when they audit, it's years later. So you probably won't remember. You probably won't remember that happened. So unless you have your books perfect and you have everything documented and say, okay, this was supposed to be deposited here and they really deposited it right here, you don't really need to transfer the money from one account to another. Now, if you don't have that control in your books and you have, a little here and there mess up on your books, then maybe it's easier so that if the time comes and that happens.
We have a question in the back. Yeah, sorry.
You have all the support for everything for IRS or Department of Revenue. It's more of the support. Anything, they'll understand that sometimes, even me, I tell them, this is my account, from the company, and they send it to me through my personal. Or they send, I sent it to you through Cash App. I'm like, I don't use Cash App. Oh, I found you. So, so those things happen, and I'll just have to transfer because I'm not going to tell the client, I'm going to resend it back, and then you're going to resend it to me. That's, that's not going to happen. So we try to follow as much as we can. Sometimes there's things that we can't control.
So when you're doing the procurements and you send them the invoice of how everything is going to cost that you're going to pay for them, under what accounting line should we mark that that's money that we're spending in their behalf?
You say the details
Example,
on it?
I will do a project, right? Select all the furniture and I'll send them item by item how much that cost and a total with tax included. So they pay that to me and I will pay that to the store.
Right.
When I make that deposit to the store, in which accounting line should I mark that expense?
Yeah.
It
is cost of goods sold, but
it's not
right. Well, so the books are per company, per person. So the books should be what tells you. So people really think that we have to go by the chart of accounts that that the IRS has. We have to go by the chart of accounts that QuickBooks gives me, and it's really not like that. In reality, you are the one that has supposed to have the books the way it's good for you. So I do different type of services. So I do accounting services, tax services, consulting services. At the end of the day, when I do my taxes, I put services. Now, for me, in my books, I have them separate. So I make sure that I know how much I made in taxes, how much I make, because it is important for me. So same thing goes for sales tax. There's people that pay sales tax and put it under a contra income account. So you will see income and then minus. So it's recorded like as a discount, and it's really not a discount. That's just a visual way for them to see. There's others that just want to pass it through payables and expense, and they're just going to net out. They don't want to see it in their report. Because at the end of the day, when it gets reported, that's money that got into you and you paid. And the same thing goes for those things. It's going to be, if you really resell things, you might not want to use cost of goods sold because you're really sold, you're selling other ones. So you might just create a new word of cost of, I don't know, goods not sold, resell goods. At the end of the day, you don't have to
Or
use those.
reimbursement.
Exactly. Those exact accounts when you do your taxes is more for you to have that visual side, and you have to, separate them on your book so that you know.
I know that everyone runs to Home Goods once in a project and buys a lot of things, and we have to get reimbursed. So that's just an expense report, really.
Yes. So
for the last touches and decoration. So I bill it as
Right.
purchasing for the core reimbursement.
Yeah, because you go to Home Goods and you pay for the taxes there.
Mhm.
So there's no resale tax there. There's no problem. The biggest problem that the Florida Department of Revenue has regarding sales tax is not really the reporting side. It's really collecting and not paying.
Mhm.
There's where the huge fines come in. There's where there's the misdemeanors, there's felonies, there's even jail. And I show you, and I was explaining to you that because you're taking money that is not yours and you're not repaying. It's like you're stealing something. So
and you
when
said that
you have to
happens
go-
even in $5,000.
even in $300. So having errors on collecting or not, not collecting it the right way, or putting it in one another, those things, when you have a good tax accountant, they can go for you, and they can fight for that and make sure that you have the proof that that was a design and I was really not reselling it. Biggest issue of having someone represent you and not winning is you collected and you took it. And you have, it's the 3 years from now, you have all these sales tax from other people that you never paid because you had no idea. And it happens. It happens to a lot of people that open up business, opens a resale tax, charges sales tax, and think that the sales tax is the money they're paying the IRS for their taxes. And that's it.
Year.
They don't know that there's money. That money has to go to the Department of Revenue, that you're a collecting person, you're a collecting agent that had to resell it. So
I have here in the statistics that I found that according to Avalara, a tax compliance software company, 30 to 40% of small businesses miscalculate sales tax on invoices, and a significant percentage of designers undercollect sales tax due to unclear state regulations. So that's why we're here opening this. Probably we're not going to get all the answers solved today, but I encourage you. You probably do one-on-ones and could do some advice or reach out to your CPA and continue this conversation because it's important. We have a question from Caro.
Yes. Good morning.
Good morning.
Can you please explain the calculation from tax and surtax? I want to
So,
understand.
yeah, it's going to depend on where you are. So surtax and sales tax is going to depend on the county. So let's say for Miami, it's 6 and 1. Even in Coral Gables, it changes. And it's going to depend also on the industry. So for you, it's going to be 7. But if you have, I don't know, if you rent a property and it's commercial, like rental, and it changes. Right now, it's in 5.5, let's say 4.5 plus 1, because they keep changing that. And then governments also on their regulations, depending on what they want to help, maybe, I don't know, commercial when that happened, or restaurants. So all those keep changing. Sometimes they lower it. I have a client that sells tickets in Tallahassee, and it's 9% there. So, and the surtax there is 1.5, and here it's 1. So you'll have to check on where you are, and it changes constantly too. Usually Miami, it's 7% with a 1% surtax.
And there is a break, like for example, in construction material, I remember that when you reach $50,000, you pay certain amount, and then
right. So that changes that changes periodically too, and the same thing goes with how do you charge sales tax when you're in different states? So that changes too, because it has to depend on the states. Let's say now Florida has something saying that if you sell online $100,000 or more a year, then you have to collect sales tax on everything. Now they're going through physical presence and economical presence, where before, if you have something like, if this furniture place is just in Miami, then you will just collect if they were sold in Miami. Now, if you sell it in, I don't know, New York, you won't be collecting anything there because the furniture was here. Now they're changing it to how that company has
does
physical.
anyone here do projects?
That was like
Let's
So
bring the mic to you.
So it's going to depend a lot on the state, because you'll have to regulate not just the state where you're at, but the store where you're selling or where you're buying. And then some of them goes by physical presence, meaning that you have to have a business there, like established or a local or like um, an office or employees or something. And others go different just by economical presence, like how strong is that brand in that place.
I understand, but to make it clear, we're based in Miami.
Right.
We help clients throughout the US and sometimes outside of the US. As of now, we're working on a project in Houston. So I buy my furniture with my distributors here, but I'm doing all the deliveries in Houston. So when I charge my client, even though I buy, should I charge him with the Houston taxes? No.
No, per Miami law or Florida law. Now you'll have to see what's the law in Texas to see what is required there. Because the use, so the sale is here, but the use is there. So every state has a different law. For Florida, no, because you're reselling it to someone that it's outside. And for Florida, unless you go to the $100,000 rule, you don't charge sales tax if it goes out of the state of Florida.
Charging Florida taxes.
Right. So for you, if you're just going to sell it here, you're going to be just reporting here. Now, if you're going to be selling it in Houston, we're talking about selling, not just delivering it, right? If you're going to resell it, then you'll have to go by the law in Texas. So you'll have to find out in Texas what is the law there. If they have a nexus, what they call to, which is one state and another. If they go by you having a physical presence, meaning you having an office there, or you having an employee there, or you having someone there, or if it goes just by economical presence, that doesn't really matter if you have someone there because you're doing a lot of business there.
Okay. And we have a case. There is a very big fixture store in Chicago that is selling to the trade, to some of us, and they don't charge us taxes. So for our clients, it's like, yay, we're saving. Is that a right way to do business? Or
because
no?
that's the way they do it, and that's fine. Because you're going by the law that, they're in Chicago, so you have to go the law, how the law is there. And the same thing goes if you buy from India. If you buy from India, they'll ask you for the resale tax from Florida. And they'll be able to ship you tax-free.
Okay, but now, I'm not supposed to collect taxes for the client if I didn't pay them. Right. In the Chicago scenario.
When they transfer here?
Mm-hmm.
I don't think so, because you won't be paying taxes because it's not here.
But no told that is for that.
Right.
There's a mic.
So the same thing goes when it happens to let's say India, and people bring the stuff here. Now, if you bring it here and your storage is here, you have to charge sales tax when you sell it here, even though you bought it from another place. Now, if you buy it in India and you ship it through straight from India to Chicago, your other client is in New York, your other client is, then you don't pay taxes. But if it stops in Florida and then you have a warehouse in Florida and your business is in Florida, and now it's something that you bought in India and you're now reselling it to a client in Florida, then that you have to pay taxes in Florida because it's being used in Florida.
It's the name of the taxes, sales and use taxes.
It is correct. It stays in Florida.
No, please.
Oh, I have two quick questions. Do the same interior design tax principles apply to construction and development? For example, if you're charging for pre-construction services, the architect, the engineer, the codes, the permits, that's a service.
Right.
But at the same time, construction is going to start maybe in a year or in a year and a half. So that period of time, is this invoice, do I need to charge fees for this invoice because it's going to be linked to constructions? Or if it's a period of time, a lengthy period of time, it doesn't apply the tax? I want to know how that works.
So sales tax is collected when you receive the money, not really when you invoice the client. So if your invoice goes for 2 period of time, it's going to be a matter of how you're receiving it. For example, the one that sells the rugs, usually you prepay part of it. And then when you receive it, which is months later, then, you pay. So you pay sales tax on the amount that you received at that portion. And then you pay the rest when you receive it. Because why will you be paying sales tax if, they haven't paid you? I understand with the construction too. Usually construction has their own things because it's going to depend on if things are fixed to the property or things are not fixed to the property. And then usually they go by construction in progress. So they have a whole different way of calculating their fees throughout and that can last throughout 2 to 3 years. You can do a flip where you buy it right now and then you can gonna sell it in 3 years. So usually those go into an accrual of accounting instead of going to a cash of accounting. And then those go through construction in progress and they have a work in progress way of taxing. But that's more like a federal tax than the sales tax.
That's my question. So if you're billing for that pre-construction service, which will be the comparative to the concept and development interior design, do you charge for that federal tax for the 7% on that invoice if
No.
it's a service?
No.
Okay. And the other one was, if God forbid you get an audit, what documentation do you need? Your contracts, your receipts, or something else?
No, usually the contracts and the invoice and the payments. That's usually what they ask for. In the case that you bought something and and sold it, then the invoice of buying that. And then if you get audited, let's say they got audited here, they'll ask for the resale tax of the people that or the customers that bought it. So if you're gonna resell it to someone and that person is gonna resell it again, then make sure that you request the resale tax for that person. That will be the only thing that they'll request.
Any other questions?
Sorry, I didn't get it the first time. What's the benefit of having a second bank account if it's the same company? Even if you have a new DVA, it's the same A number. It's the same legal company, just with different names to operate. What's the benefit in terms of an audit? Because it's the same corporation, same client. Maybe you can split the contracts, but it's,
I think it's more not for the audit, it's for our peace of mind.
Right. It's for you to have a better control so that you can separate it. But it's not really,
Yeah.
you don't really
I thought
need
it was
it.
from sales tax
No, and then
perspective.
you can also, I have clients that they don't want to have another sales tax account, bank account. And what they do is just have another accounting. So in their books, they have another account. Like instead of calling it, let's say if you call it procurement, then you call it, so you have a specific line for that. So if something comes in,
it's
that
created.
income you can put as procurement income, service income. So you separate it in your books if you don't want to separate it in the bank.
Like, for example, in my case, I have different income accounts, like designer fee, sell of product account. That's fair enough.
Exactly.
To be able to show them why this group was taxed. Well, did not collect sales tax in this one.
So you have the option to do it
Assuming
through a
I don't
bank or you do it through a QuickBooks account or through
okay.
accounting method. Yeah, it's just for some people it's hard or they don't maintain their books constantly. So they put everything, okay, this is how much, money I deposited in the year, this is how much I made, and they don't have that difference. So if they have a bank account, they can say, okay, this is how much I made in this bank account and this one. But if you have good accounting records, you don't need an extra bank account.
I have a question for Andrea. I have a question because she's a procurement agent for La Cruz Design and Florida Interiors. Do you have a separate business account for the procurement?
Hello. Actually, we don't. We're
Under the
learning
same
today.
umbrella?
Yeah, we have just one bank account and we do everything there. We put all the money there for the buying the furniture and for the procurement fee.
But you
and
do have
everything.
a separate department that is separate from
Oh, yes.
Adri. So
Yes, I'm the one who
you handle the procurement
I
side.
handle the procurement side exactly,
Okay.
and the
So
invoicing
that
and
has
all that.
your own bookkeeping for procurement.
Yes,
So
exactly.
I think that helps us, like knowing how you do it helps us grow as well, because we can have a procurement with another QuickBooks, just like what you said right now.
Yeah, it's a matter of records for you. So it's gonna depend on how big your company is, how much movement do you have, how organized you are. I have clients that come every month. I have clients that come once a year with all this paperwork and they don't remember that. And you go by the bank and trying to figure out, how much got deposited. They don't remember if that was, from a client or from a fee, and
Right.
they have all this. So I always tell my clients that the book should be for them, not for the auditor, not for the IRS, not for the Department of Revenue. The book should be for you because that's the way that you see how your company's doing, where you're making the money, where you're making, the biggest expenses. So the more detail that you have, the better organized it is. And if by some reason one time you get audited, you're going to understand it better. That if you have everything commingled, in one account, it's going to be very hard for you to
And
figure
for
that out.
our CPA to keep track of our transactions, it's also better to have clear.
Exactly. So because let's say me, I have different type of clients in different type of industry. So even though I know the law, the only person that really knows your business is you. You know, I take your books maybe once a month, every quarter, maybe for sales tax, or maybe once a year. I sit with you and go over it, but you're the one that it's really there, you know, month by month, and seeing and saying, oh, this person, I had to buy the slabs because she couldn't pay me and I had to do it through the phone. Right. You won't remember that when the audit comes in, or when the accountant comes in. So all that detail, you can just put it in there. If something happens, then your tax accountant is going to have all that information, and it's going to be very easy for them to just fight it for you.
Okay. Are there any more questions? If not, we can wrap up and then harass you at the coffee break with questions. Any more questions? No, we're good. So we're going to close. We've been almost an hour discussing this. If there's any tips that we should do by managing our business in a better way,
I would say that having your books, you know, done at least every quarter, especially if you deal with sales tax. You know, if you deal with sales tax, make sure you do. I always tell the clients to, when you're starting, don't take out the resale certificate, you know, unless you know you're going to use it. Don't put yourself in all these extra things when you really don't need them. Don't go from an LLC to an S Corp right away. Make sure that you know the difference between going through an S Corp and everything that comes with that, you know, and just don't make a move before like talking to a professional. Go step by step. And I think it's just a matter of try to understand it and try to keep your records. And if something happens, just respond. You know?
You do have cases where you've had audits on interior design businesses, correct? So if we ever come up into a problem, we already know you have experience in dealing with this. So usually, I think that's also a tool for us to have somebody.
I was an auditor for 7 years, so I was on the other side at the beginning.
Wow.
I was not an auditor for the IRS. I was an auditor for private companies. But I do know how the audit works on the other side. And I have been the one like supplying things for clients. And actually, I got a lot of clients that are audited. Most of them are more audited IRS than, you know, the resale tax. And most of the time that the people get audited on the sales tax, it's really not in the service side. It's really more on, you know, not reporting. Product. So by reporting, you're saving yourself, like, you know, from a big audit, because usually the ones they go after is the one that don't report.
That don't respond.
That don't report, that open up and leave it there. That they keep, you know, sending all these letters in until you get a letter that says you have a lien. And then when you want to refinance your house, you have a $13,000 lien in your property for something. Yeah, you didn't even owe any sales tax because you're not reselling anything. You have never collected $1. Mm-hmm. And then, you know, it's an issue. So if you see a letter from the Department of Revenue, answer it, call them. There's an office there in Doral too. You can pass by there.
Is that the only one? Is there one in Aventura or?
I don't, I think that's downtown? The only one in South Florida. Then you have to go to Broward.
Okay. So we're going to end, and thank you so much. As we wrap up this special edition of Creative Talks, I want to extend a huge thank you to our expert, Ana Maria Focil, for sharing her knowledge and answering our most pressing questions. A heartfelt thank you also goes to Anima Domus. Thank you for hosting us today, for this thoughtful gift that we got, for your support to empower our design community. And at the end of the day, we do what we do because design is more than aesthetics. It is about bringing visions to life, creating experiences, and building businesses that thrive. Our goal is to equip ourselves with the knowledge and tools, not to only elevate our craft, but also to navigate business side of the design industry with confidence. Thank you to all our live audience for being part of this conversation, and to our listeners for tuning in. If you found today's discussion valuable, share it with a fellow designer, and let's continue to support and grow our creative community together. Thank you so much.
Thank you.
Thank you so much for listening to the Creative Talks podcast. Your 5-star reviews really help us continue what we do. Please rate your listening experience, and let's keep building this beautiful community together. For exclusive access to more design content, visit thearchitecturalauthority.com or download our app from the App Store or Google Play. Until next time, take care and keep creating.